Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today is the 22nd of April 2019, so welcome everyone. Welcome to this Monday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so now then let's quickly have a look at a few charts. Now the first one I want to touch on here is platinum. Now I've talked about this one a while ago, and basically I was telling you to keep a close eye on this one, and looking at this daily chart you can see how well now it's trading above its long-term downside resistance line that has been running here from the highs of August 2011, and the commodity continues to trade above this. You can see that it did reach the 915 level, from which it retraced back down, tested the 878 level. Perfect technical analysis here, guys, and now it's rebounding and pushing back to the upside. So what you can probably understand from looking at this chart, we need to see a nice good pop above the 915 level in order to kind of aim for much higher levels. I mean, this is such a move would confirm a forthcoming higher high. The next target for us would be around the 930 zone, which is near the highs of the 11th of May 2018. But if that fails to hold, yep, further acceleration to the upside could be possible. Then keep your eyes on this 954 zone, marked near the highs of the 19th of April 2018. So very good potential targets here, but before we can consider these higher levels, we need to see that good confirmation break above the 915 level, and to be honest, we would probably prefer to see a daily close above that level before kind of getting excited about the upside. In terms of the downside here, well, probably we will wait until we see a fall below the 878 level, because this way the commodity would also break the this upside support line, this tentative upside support line taken from the near the lows here of the 14th of February, and then of course we'll take it from there, see what it wants to do, because we do have a problem here for the bears, because we do have this downside resistance line continuing to, if we drag it further here, this is what the bears could kind of hit. The slide lower could eventually test this downside resistance line, and if it fails to drive up below it, then yep, we could see something like this happening basically, and then maybe another push higher, but of course this is for now, this is just an idea, and again an idea for a scenario if we see a drop below the 878 level. The moment it seems that the downside could be slightly off the table, but then again, in order to get more comfortable with higher levels, we need to see that push above the 915 level, or even better, like I said, the close above the 915 level. Jumping into a few of the pairs now. So AUDJPY, now that's a very interesting one, and for this one let me just open a 4-hour chart for this one. So basically, look, you can see what's happening here. So after a successful run here last week, or should I say the week before that, and then of course it continued to travel higher last week, but then started selling off at the end of the week. Now it traveled back down, it tested the 79.85 level, and this is where it's currently sitting at. The only issue here is the fact that it actually broke this little short-term upside support line that kind of was playing out nicely. So in a way, it broke this short-term upside support line, but it's currently balancing around the 79.85 level. So in order, let's say, for us to consider further declines here, of course, we would like to see the pair kind of staying inside this range, in this previous range that the pair was trading in before, like from around the end of January. And if we see this one kind of dropping again lower, for us, let's say, to consider maybe a deeper slide lower, we would like to see a drop below the 79.64 level, 65 zone, approximately there, and only then we will target lower areas like the 78.93 or even lower. Now, I'm not talking about this lower side of the this previous range, because it's still kind of far away from here. Let's first deal with this 79.85 level and see what the pair wants to do with it, because like I said, even if we see a drop lower here, certainly that could be a bit of a bearish signal, yep, it would be a bearish signal, but for better confirmation of the downside, wait for a drop below the 79.64 level, 65 zone approximately there, and only then target lower areas. For now, because we could see maybe this one dropping lower, but then actually giving us like a false breakout and traveling back above the 79.85 level. Basically, this way it would take out a lot of stops here, and yep, we could see this one reversing, pushing back up again. So that's why for us now, in order to, let's say, aim for slightly higher levels, at least towards these higher levels that we saw last week and the week before that, we would need to see this one traveling initially above this little area here, above the 80.10 zone. So only then we will aim for higher levels. Of course, this time we'll ignore this line, no longer required. So basically, in terms of the upside here, what we're going to be waiting for here is for a break of the 80.10 level, and only then we will target the areas like the 80.70. For now, we're going to remain neutral and continue observing these important levels that I've just mentioned. NZDCAD, very interesting developments here as well. Looking at this chart here, you can see that basically this line is no longer required here. But what's interesting here is that it traveled lower, the pair traveled lower, and now it is testing this key area of support near the 0.8915 level. So basically, if we see a nice good drop below this, then yep, we could potentially start targeting slightly lower areas, and by lower areas I mean the 88.57, the 0.8857, which acted as a very good area of support here back in around mid-November. And it acted as a good area of support from which the pair rallied here. But of course, if that gets broken, then we will start considering even lower levels. But for now, guys, all eyes are on this 0.8915. Of course, it's now rebounding from it. Let's see if the bulls do have enough steam to drive this one higher. For us, let's say, to consider at least some higher levels, we need to see a nice good push above this one right here, above the area near the lows of the 9th of April and near the highs of the 19th of April, and that's around the level of 0.8958 zone. So basically, long story short, guys, in order to kind of aim for slightly higher levels, we need to see a nice good push initially, of course, and above the 0.8958. And then we could aim for higher levels. Now let me just adjust to some of these guys here. So our next little target for if we see a nice good push above the 0.8958 could be this little area right here near the highs of the 16th of April, and that's approximately around the 0.9055 zone. So keep your eyes on this one. Like I said, could see a move like that, especially if we see a further rebound here away from this 0.8915, and of course then if we see a break above the 0.8958. For now, the pair is currently, like I said, balancing slightly above the 0.8915. Let's let's see if it actually does move back up here or not. But if it doesn't, then well, it could turn out to be quite ugly for the bulls, and we could see the bears kind of dominating this one and pushing the pair lower. But again, like I said, let's wait and see. For now, we'll continue observing these key levels, the 0.8915 level on the downside and the 0.8958 zone on the upside. Jumping into EURCHF, very quickly now, I was talking about this one last week basically, and we had a nice sell-off here on the 18th of April, and that's basically Thursday. So we saw this pair sliding lower and testing its key key upside support line. Initially it was a bit of a tentative one, but you can see that how well it is still playing out. So and also, of course, looking at this chart right now, and I do apologize for it being a little bit squeezed here. Let me just adjust this. There we go. This is much better. So in order, let's say, to aim for higher levels, we need to see a clear close of above the 1.14, 20, 23, 25 zone, approximately there. A nice good close above this level could potentially lead towards further higher areas like the 1.1444, which is marked by the or should I say near the highs of the 5th of February. But if that fails to withhold yet, we could see this one traveling further up here up towards the 1.1470, but then again, let's go step by step. First, let's see where this is gonna close, where this 4-hour candle is gonna close. If it's gonna close above the 1.1423 zone, then yep, it does have more chances to travel higher. And like I said, we're just gonna drag it only up until here, up until the 1.1440, 43, 44, something like that. Even though I do have my arrow here towards the 1.1470, but that's quite a big jump here for this pair. So that's why, guys, for now, just keep it simple, short and simple. Let's keep it a little till here. Certainly, like I said, it is looking quite positive for us. Let's say to switch our view towards the downside one, we would need to see a drop, initially a drop below this steep upside support line, and then for better confirmation, probably a nice good move back above the 1.1388 zone, approximately there. This way, of course, we could target the Thursday's low near the 1.1364, and if that fails to withhold slightly above that, slightly below that, we do have this upside support line that is running from the low of the 2nd of April, which also could get tested. But of course, that's in the scenario if we see a slide lower, and initially if we see a break below this upside support line, this steeper one, and then a drop below the 1.1388 zone. So that's why, guys, excuse me. That's why, guys, for now we're going to be very cautious. Certainly it is trying to push higher. Let's see if it actually manages to travel further away from the 1.1423 zone, and then yep, we'll target the 1.1444 area. So keep your eyes on this one. Let's see how this is going to play out, but it is looking quite bullish for now. And the last pair I wanted to quickly touch on, and that's EURJPY. Now, with this one, it's a little bit trickier because it's stuck here just slightly above this 125.65 level, but it continues to trade below the 126.15 zone. Now, these are the levels that we're going to be looking out for, because a break above this 125.15 level could place the pair back above this key area of well, now it's going to be as resistance, but you can see that last week here on especially on Tuesday, the area acted as a very good area of support from which the pair tried to bounce higher, but kind of failed to drive above the 126.80 zone, and then reversed and had a nice strong break here below this 126.15 level, and then almost tested this tentative upside support line. You can see I kind of fell shy of a few pips from testing it, and now it's kind of trying to push higher higher. Again, of course, for now you could say that yes, it is still trading above this upside support line, so in a way with the path could be holding towards the upside. But just for a better confirmation, let's wait until we see a push above the 126.15 level. This way we could then target the 126.80 level again. You can see that how well it acted as a strong area of resistance last week. So keep your eyes on this one. If we see a push above the 126.15, in terms of the downside, if this starts breaking this tentative upside support line and we see the rate sliding below the 125.65 level, now this is where it could become a little bit ugly for the bulls, because we could see this one, the pair sliding lower. Of course, we would also have the pair now trading below the 200 EMA, and then yep, we'll target the 125.46. But to be honest, there are some better areas of potential support here. The first one being the 124.95, which acted as a good area of support here back on the 8th of April and also the 4th of April. Not to mention that it acted as a good area of resistance here on the 1st of April, or just slightly below that we do have the 124.77, which is the low of the 10th of April. Now, again, like I said, in order to kind of consider this scenario, we need to see initially a break of this upside support line and a rate drop below the 126.65 level. So keep your eyes on this one, guys. For now, we're going to remain neutral and just continue observing the price action. Okay, guys, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me tomorrow morning at my Traders Espresso, and that's 6 o'clock GMT time. But for now, I hope you have a wonderful evening, and I'll see you later. Bye-bye.